Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 5th, 2025, we're putting the spotlight on Tesla, ticker symbol Tesla, which has been making significant headlines. The most impactful news circulating is the recent approval of a colossal $29 to $30 billion stock award for CEO Elon Musk, aimed at keeping his energies focused on Tesla. This development has been a major catalyst, with news outlets reporting a rally in Tesla stock following the announcement, despite a broader market sell-off and subsequent bounce in the Dow. However, not all news is unilaterally positive. The Motley Fool, for instance, has published a prediction suggesting a quantum computing stock, Alphabet, could be worth more than Berkshire Hathaway, Palantir, and even Tesla combined by 2030. Citing intense EV competition from players like BYD and skepticism around Tesla's robotaxi and Optimus humanoid robot projections. While we also saw Ferrari, a luxury auto sector player, report strong Q2 2025 earnings with increased revenue and net income, it highlights a diverse automotive landscape. But our primary focus remains on how these specific events are shaping TSLA's chart. Let's zoom out and look at the daily chart for Tesla, encompassing data from March 2024 through early August 2025. Observe the significant rally that carried Tesla from the low 140s in April 2024 to a 52-week high near $488 in December 2024. This period represented a strong bullish trend, marked by consistent higher highs and higher lows. However, following that peak, the stock entered a prolonged period of consolidation and a notable downtrend through much of 2025, characterized by lower highs and lower lows, signifying a clear shift in market sentiment. Now, let's narrow our focus on the daily chart to the period from early June 2025 to the most recent trading day, to better understand the immediate context. We can clearly see a sharp decline in early June, which brought Tesla down to a significant support level around $273, marking a critical low. Since that point, we've observed a substantial rebound, with the stock showing signs of recovery and building upward momentum, ultimately leading into the rally we witnessed yesterday. This bounce from the 270s is particularly important as it could signal a potential short-term reversal from the prevailing bearish sentiment. Turning to the 1-hour chart, while our available data here only extends up to July 22, 2025, it still offers valuable insights into short-term volatility. Within this time frame, we see continued price swings and attempts to break above resistance, particularly around the $310 to $320 range, which consistently acted as a ceiling for price action in mid-July. This resistance area will be crucial to watch in the coming days, given TSLA's current price. For a clearer picture of the immediate impact of the news, let's examine the 15-minute chart, focusing on the trading day of August 4, 2025. At the start of the day, around 10:03 a.m. Universal Time Coordinated, the chart clearly shows a rapid and significant upward price movement, directly coinciding with the news of Elon Musk's pay package approval. This sharp jump was accompanied by a noticeable surge in trading volume, confirming strong buying interest driven by the news. Following this initial burst, the stock entered a phase of consolidation, trading primarily within the $308 to $310 range for the remainder of the day. This suggests that while the immediate reaction was bullish, market participants are now digesting the information and assessing its longer-term implications, leading to a tighter trading range. The $309 to $310 level now acts as immediate resistance being tested, a critical battleground for short-term direction. A sustained breakout above this consolidation zone on higher volume would signal continued bullish strength. Considering the bullish case for Tesla, the primary driver is undoubtedly the approved compensation package for Elon Musk. This monumental award signals strong confidence from the board in his continued leadership and ambitious future plans for the company, which could re-energize investor sentiment. Furthermore, the stock's recent strong bounce from the $273 support level suggests robust underlying demand and a potential shift in momentum. If Tesla can successfully break above key resistance levels established during its previous downtrend, it could indeed signal a reversal to a more sustained uptrend in the short to medium term. However, a bearish perspective also holds valid points. The electric vehicle market is becoming increasingly crowded and competitive, with global players like BYD continuing to expand aggressively. Skepticism remains regarding the timeline and ultimate profitability of Tesla's ambitious robotaxi and Optimus humanoid robot initiatives, as highlighted by some analysts. Moreover, despite the recent rally, Tesla stock is still trading significantly below its 52-week high of $488, indicating a substantial amount of overhead resistance from previous buyers who are now underwater. There's always the risk of profit-taking after such a sharp news-driven rally, especially if the broader market experiences renewed weakness. To recap the important price levels to watch, on the support side, the recent strong bounce from the $280 to $290 zone is critical, reinforcing this as a near-term support floor. Further down, the $215 level from mid-2024 and the $140 to $160 range from early 2024 represent much stronger long-term support zones should the price experience a deeper correction. For resistance, Tesla is currently battling the $309 to $312 level, which previously acted as a ceiling. Beyond that, watch for resistance at $320 to $330, followed by the $340 to $360 consolidation range from earlier this year, and then major resistance at the $400 psychological level, ultimately leading up to the 52-week high of $488. For unbiased predictions in the short term, there's a high likelihood, approximately 70%, that Tesla will continue to test and attempt to break above the $310 to $312 resistance if the positive momentum from the Musk pay package news persists. A sustained move above $312, ideally with strong volume, could then propel the stock towards the $320 to $330 range, which we assign a medium likelihood of around 50%, provided broader market conditions remain supportive. Conversely, a failure to decisively break above $312 or a rejection from this level could see Tesla pulling back to retest the $300 mark and potentially the $290 to $280 support zone, a scenario we gauge at a medium likelihood of 40%, especially if profit-taking ensues or new negative catalysts emerge. Long-term, if Tesla can firmly establish support above the $290 level and consistently make higher lows and higher highs, a gradual ascent towards the $340 to $360 range becomes more probable. Things to look for in the coming weeks include Tesla's next quarterly delivery numbers, any concrete announcements regarding FSD or robotaxi deployment, and how quickly competitors like BYD continue to expand globally. Always remember to observe volume trends, as sustained buying volume on upward moves reinforces bullish strength, while rising volume on downward movements indicates selling pressure. Additionally, monitoring the overall market sentiment, especially towards high-growth tech and EV sectors, will be crucial for predicting TSLA's broader trajectory.